Hey, good morning, Facebook folks. Let this build up a little bit. Let me get on my computer. Good morning this morning.
Education is laying a biblical foundation I will rely upon always. And to God be the glory.
The College of Biblical Studies is regionally accredited and currently accepting applications for the fall semester. Apply online at cbshouston.edu or call us at 713-77-BIBLE.
The following program paid for by Right Path Real Estate.
Wow, that was not a minute.
I know, it was like, it's like 15 seconds early.
It's time to get on the right path with Right Path Real Estate Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817. You know, this is a rare occurrence. It's not very often that I get, first off, that I get to do a Monday show. Secondly, that I get to do a show by myself. Because I normally do the Tuesday, Thursday, Build Your Team. So normally I'm interviewing. We have 3 different radio show sponsors, people that can, you know, that you can utilize to be on your team, whether it's property management, whether it's appraisals, construction, foundation, I mean, on and on and on. You know, this is real estate investing. In fact, life in general, you don't get through life by yourself. Life is a team sport. So any investment that you get involved in, that's a team sport as well. Whether you've got financial advisors, whether you've got CPAs, you've got attorneys. You know, it's difficult, if not impossible, to get anywhere in life all by yourself. So I normally do the Tuesday and Thursday. And then Jason and I do Wednesdays together, and so Jason normally handles Monday and Friday. So we have a 5-day-a-week show, Monday through Friday, and I do 3 days a week, and Jason does 3 days a week, so we overlap on Wednesdays. And with Jason being out of town on vacation, and Veronica, what are you doing joining? Veronica's out of town as well, and so you know, with Jason being out of town on vacation Monday and Friday, it's that season. Then I get to take over the radio show today, have it all by myself. So, yeah, buenos dias. And so one of the things that I want to talk about, I go to a lot of networking events, and one of the events, or one of the phrases that I talk about, one of my favorite pop-up banners that we have it's from Alice in Wonderland. And, you know, Alice is, you know, bebopping down the trail, and she's on this path, and there comes a fork in the path. And then she looks down, and there's a rabbit there, and she says, "Mr. Rabbit, which path should I take?" And she said, and the rabbit answers, "Well, Alice, where are you trying to go?" And Alice says, "Well, I don't really know." And the rabbit says, "Well, then it doesn't really matter which path you take." So here's the issue. If you don't know where you're going in life, whether it's education, whether it's investing, whether it's, you know, a hobby, if you don't know where it is that you're trying to get to, it doesn't really matter what you do on a daily basis. You know, it's your goals first that determine your actions every single day. I'm reading a book right now, and one of the things that it talks about is that your daily disciplines are going to help determine what your success is going to be in life. And how many people do you know of that say, "Man, I want to get on a workout. You know, I want to get in better shape. I want to start working out more frequently." And yet they lack the discipline to get up every morning and do those things. But, you know, discipline by itself is typically not enough. Because imagine if somebody like, you know, the swimmer, I think it's Michael Schumacher, right? Michael Phelps, sorry. Schumacher's the famous Formula One driver. Michael Phelps. Thanks for that, Nikki. See, it takes a team, right? You surround yourself with people that are part of the great team. You cannot get to success by yourself. Michael Phelps, just having the discipline to get into the pool every day is not enough. He needs to be able to compete at a high level against other top competitors. You've heard the phrase, iron sharpens iron. He also needs to have a good coach, somebody that's going to say, hey, Michael, what I see you doing is this, this, and this. You're doing these 3 things incorrectly. If you'll correct these things. When I look at the Houston Astros and the success that they're having right now, part of the reason why they're having the success that they're having is they have a particular coach in pitching for baseball that he has a unique ability to take average or slightly above average pitchers and make them into really great pitchers by just changing a few things. Oftentimes it's the level where their elbows is coming in slotted. Those kind of things. I'm not an expert when it comes to baseball coaching, but what I know is a great coach can make all the difference in the world. So it takes great competition, self-discipline, and a really great coach. And all 3 of those things will improve your level of success. One of the things that I know is that if you look at people that we admire as success stories in life, take somebody like, most people would say Elon Musk is relatively successful, but is he successful by himself? And the answer is absolutely not. Or we look at any great sports team or, even in individual athlete sports, you take like singles in tennis, you take a Roger Federer or somebody like that. He did not get to that level of success all by himself. Now, don't get me wrong. I'm not trying to minimize the amount of effort and discipline and work that he put in it, but he typically is going to have a nutrition coach and a life coach and a tennis coach. And, he's got coaches in all different, and then now he's got a financial coach as well and a marketing coach. And, all of those things is what it takes to be successful in that arena. And people that are successful, they know what other people that are successful in that arena are doing. But before all of those coaches came into play, Michael at some point in time in his life decided this is where it is that I'm trying to get to. The number one reason why Jason and I, after literally hundreds and hundreds, if not thousands of people that we have talked to one-on-one about being successful in real estate or in life, when we ask this question, where are you trying to get to a year from now, 3 years from now, or 5 years from now? The number of people that can actually look us in the eye, make direct eye contact, and give us a straight answer that they clearly know that they know that they know that this is where I have decided I want to be, that number is less than 1%. That means that the other 99% of people are on a pathway that's taking them someplace that they will be in a different place a year from now, 3 years from now, or 5 years from now. But is it that place that they've chosen to be, or is it just some place that they go, oh, how did I end up here? If I just put a blindfold on and started walking, just spin me around and I just start walking, I may not like where I end up, a day from now. Let's just say I decided I'm going to go walking for a day just as an experiment, see where I end up. Can you imagine the pitfalls and the challenges and things like that I would face that maybe for naught? In other words, I'm on my way getting someplace and I'm going to run into some fences. I'm going to run into some, maybe some streams or some some bayous, some rivers, some flatlands, some hills, maybe some cliffs. And I go, man, I've got to cross this cliff. Well, do you really? I mean, if you cross this cliff, what's on the other side? And is that other side where you're trying to get to? I mean, it's a great analogy to, there's oftentimes people are trying to figure out this, imagine if in order for you to be successful, you had to be able to figure out how to do a Rubik's Cube in under 2 minutes. And some of y'all right now are thinking, Rubik's Cubes, those things are hard. Well, if you could certainly figure it out if that was the next step for you being successful. But what if it's not? What if it's just a task that doesn't really accomplish anything other than you're solving that puzzle or that riddle? I mean, what if knowing that knowledge doesn't improve anything in terms of getting you a second or a step closer to where it is that you're trying to get to? And how do you even have a measurement or be able to build a metrics if you don't know where you're trying to go? You know, I'm going to be going on vacation myself next week. And once I decided that I wanted to go and where I was going, the path of planning the trip was really easy. I mean, I know what time I need to arrive in the place. I know what time I need to leave in the place. So then it was just a matter of, finding the airlines that fly with the fewest amount of stops, because I don't want this to be an adventure. I want it to be a destination. The point of the vacation is to get from where I am now to where I'm going as quickly as possible. And
2 minutes.
Why would you take 2 weeks to get someplace if you could get there in 3 hours? I mean, there are reasons, but make sure that you're choosing the route that you want to take by design. Today's message is about taking control of your life. In the next segment, one of the things I want to get into talking about is what's the difference between speculating versus investing. I see a lot of people that they think they're investing, and in fact, they're doing nothing more than speculating. And, if you're speculating about your investments, then you're speculating about your future. And if you're speculating about your future, you're really speculating about your life. And I think too few people take seriously the importance of setting long-term goals that are definitive, that are measurable, that are time-bound. So we'll talk more about that on the other side of the break. Don't forget, this is a call-in show. If you have any questions about buy and hold, about buy, fix, and flip, about wholesaling, we want to talk about that. We'll talk about success stories. This is going to be a fun show today. Right Path Real Estate Radio, 713-785-1817. That's 713-785-1817. Give us a call. Buenos dias, David.
Mike's off.
I shall be right back.
Okay.
All right.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez
All right, we got
team,
90 seconds.
All right.
Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579.
Man, my arms got sunburned this weekend.
Jennifer.legacymutual.com. We can't wait.
I was riding a motorcycle
NMLS
almost all day
55497.
yesterday. Yeah, and I didn't think about putting sunblock on. So
time is money in a real estate deal. If your insurance company is slow or non-responsive,
I have a buddy that's loaned me his motorcycle. He didn't have a place to park it, and so he said, "Hey, you have a garage? Do you have room for it?" I'm like, "Yeah, I can park it." I'm like, "I'll just store it there," and he goes, "Well, no, man. If you could do me a favor and ride it as much as possible." I'm like,
Nice.
I'll help you out there. I think I rode about 100 miles yesterday, all in town. Yeah.
Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do
And
for you.
then I was noticing, like, hey, up on my sleeves, it's kind of itching right there, you know? And you know, your skin gets kind of itchy when it starts turning red and on fire. Yeah.
Irritated.
Yeah.
That's benchmarkbroker.com.
All right, we're about to come back.
All right.
569-4353 or online at benchmarkbroker.com.
This is Business 1110.
All right, here we go. Hot mics.
If in junior high I'd have ever known that I'd be doing a radio show with the intro music being Back in Black, I'd have laughed. Although, you know, in junior high, kids told me I had a face made for radio. So, anyhow, let's talk about speculating versus investing. You know, if I'm going to call up my broker right now, in fact, this will be fun to do. I'm going to go on the internet. I'm going to Google something. I love this website. It's called Let Me Google That For You. And for those of y'all that y'all might want to write that down, that's worth going to. Let me Google that for you. And then, so Exxon stock. You know, I've been talking about Exxon stock price was around $87 a share. Oh, in fact, you know, about 6 months ago, I looked it up on at one of our weekend events, and I said, hey, if I call up my broker and I say, hey, Exxon's trading at $87 a share, and I'm going to buy 1,000 shares, then they're going to want me to stroke a check for $87,000. Now, I can't go to the bank and say, hey, Mr. Banker, I'm buying $87,000 worth of Exxon stock. Is it possible to borrow, you know, I don't know, half of the money so that I only put $40,000 in and, you know, buy the other, you know, with my own money? They won't do that. I mean, if you have any banker friends, just propose that to them, and they will laugh and laugh and laugh. So now I've got $87,000 invested, and the question really becomes, what's the Exxon stock going to be worth a year from now, or 2 years from now, or 5 years from now? Because this was just 6 months ago that I was talking about this in the studio, and I had no idea when I pulled up on the radio show this morning. Right now, I've got it pulled up right now. Yeah, that's good radio. $80.21 a share. So I would have lost about $7,000 on an $87,000. Be down about 9%. Just doing the math in my head. Now, in order for it to go back up from $80, if it has to go up from 80 to get back to 87, it doesn't have to go up 9% if it's gone down 9%. It actually has to go up, I think it's like 12%. So if I say, let me do this math right, 87 is the target divided by 80. That's down 9%. Then I do 80 divided by 87. Yeah, it's got to go up 12% because it's got to go up it's got to go up $7 on 80. So 7 divided by 80. Yeah, it's got to go up about 12% in order to get back up to the 9% that it's lost. So if you lose 25% in the stock market, it doesn't have to go up 25%. But we're not buying it at discount, so it's called speculating, not investing. What true investors do is they buy at a discount to a known value. Or they buy an asset class that is going to go up as inflation goes up. We know in Houston, Texas, for example, in fact, in this Texaplex, that it's predicted by all the smart economist people that right now Texas has about 28 million people in the state. And over the next 10 years, it's projected to grow about another 12 million if you draw a line in the triangle between Dallas, San Antonio, Houston, and back up to Dallas. That means that this whole area will grow to about 40 million people. Now, for the people that see the glasses half empty, they're, oh my God, that's going to make the traffic worse. That's going to make, all these terrible things. For the people that see the glasses half full, they see opportunity. And what I see is we're going to need more houses. People are going to need more places to live. People are going to need, more places to eat. People are going to need more cars in this area. People are going to need more homeowners insurance. They're going to need more car insurance. They're going to need more gasoline. They're going to need more tires. They're going to need more groceries. I mean, it's great for a lot of the sectors in our economy. They're going to need to have more school teachers, more doctors. I mean, everything that it takes to support a larger society, they're going to need all of that. So they'll need more, food for farming, the more groceries, all that kind of stuff, right? It'll affect every sector of our economy. It'll be great for jobs. It'll be great for the economy. It'll be great for people that are in the business of housing other people. So we know that right now it costs about $125 a foot to build a house, not counting the cost of land if you're doing them in small numbers. If you really get cranking up, in some things, the more you do, the lower the more that the cost of manufacturing goes down. But in building a house, it doesn't typically cost half of the building cost of building a custom-made house. I mean, I don't know of anybody that can build a house for $60 a foot. I've heard numbers of $85, even some at $80 a foot. What I know is as you get numbers down, as your volume increases to get those numbers down, then your management expenses, there's a cost of scaling as well. So, and then some of the people have said, oh, I can build a house for $60 or $65 a foot. What I recognize is not everybody is good enough in business to account for all of the costs when it comes to doing the business. In our business, in fact, this past weekend, I went out and took a look at a house with one of our acquisition guys. And, I know all the costs in our business. What I know is there's a selling cost, there's a holding cost, there's a construction cost, there's an acquisition cost. When we acquire the property, there's closing costs on the acquisition side. We normally pay that. And then there's a profit cost. And if you're not accurately calculating each of those different costs, then because you don't know what the goal is that's in mind, then you may not be able to make a valid offer or determine what you should pay for a particular property. Now, most people think that when you're in real estate investing, like you watch these A&E Flip This House shows or things like that, people, what I always laugh at is that they don't really account for all of the cost even in those shows. What they do is they say, well, this is what we bought it for, and this is how much, we spent in the rehab. Let's say, we bought it for $450,000 and we've spent $75,000 in the rehab. So they're all in for $525,000. We sold it for $560,000. We made $35,000. And like, no, you didn't. You would have lost money because even selling the house for, $500,000, you spend $50,000 just in the sales price. I mean, it costs you 10% just to sell a house. And they don't account for any of the sales costs. They don't account for any of the holding costs or any of those things. So most of those deals they show lose money. And so people get into this on their own, and it's no surprise that because they're not accounting for the cost, they overpay for the property. And that's one of the few mistakes that you can't typically recover from in an investing deal. Now, when we were meeting with the seller, we actually were walking this guy through, hey, this is what I think your house is going to be worth when it's all finished, and he agreed with the number. This is what it's going to cost me when I sell the property, and he agreed with that number. This is what I think it's going to cost me to rehab, and he said, you might be a little bit high there, but trust me, I'm not high on the number. I mean, I'm right on the money. You don't have to have the same level of experience as me to be able to accurately estimate the rehab, because I can teach you how I would estimate the rehab. So you don't have to go through thousands of rehabs in order to have the same benefit of the knowledge of what I've gained. I've boiled it down to, this is really how you calculate it. You get really, really close. So when I'm buying at a discount and I build in my profit number, I say, hey, look, this is what I think I'm going to make on this deal. And I showed him that. And I say, look, I'm going to be dealing with your property for about 6 months, and this is what I'm going to make. And typically it's going to be about 10%. And by executing well in some of the other areas, I can oftentimes squeeze out a 15 to 20% profit instead of a 10% profit. But that's called investing.
2 minutes.
I'm going to walk you through some numbers of a typical buy and hold rental property. And when you compare that versus, and I'm watching the Exxon stock go up and down. It's fluctuating right now. It's down $1.10 just for the day. So if you're buying an Exxon stock and you're speculating, I want to talk about what it is that financial advisors, what always bugged me about financial advisors when I would say, hey, tell me about this or that, and I'll tell you what their answers were and what my questions were. And then we'll talk about some of the financial terms that you should know if you're in the stock market that you probably don't, versus the few things that you need to know if you're going to invest in real estate. And we're going to talk about why real estate is the best investment in the marketplace, especially single family right now. And we can talk about more about commercial versus single family. And I love single family right now. We'll talk more about this on the other side of the break. Feel free to call in, ask questions, be a part of the show, 713-785-1817, 713-785-1817.
Mic's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and have mastered the 30-day close.
You have a caller. His name is Robert. He wants to talk about
with tons of communication.
Estimating a rental rehab.
Team
all right, cool.
A coordinator and a contract to close associate. Give me a call today at 713.
Yeah, I just did that this Saturday. Walked in, knew the numbers right off just from
on your next transaction. NMLS 514497.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before ever repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make.
20 seconds.
Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, here we go. Hot mics.
All right, welcome back. Right Path Real Estate Radio. Want to get to the phone line? Have a caller, Robert, calling in. Want to ask about estimating rehab on a single-family house. Robert, welcome to the show.
Yes, thank you. Good morning. I just wonder what is a good rule of thumb for estimating the cost for rental make ready, between tenants, what maybe the low point and maybe the high point.
So if you're just talking about changing out carpet, things like that, I can do carpet for, and when I say carpet, you're only going to typically do carpet in the bedroom. And one of the things that we're starting to do right now, when we buy a house, like there's a property I looked at this past Saturday, and we probably won't put carpet in any of the rooms, which will reduce the changeover cost. What we'll do instead is we're going with that vinyl plank. Are you in the Houston market?
Yes, I am.
Okay, so we're going to go with that vinyl plank, the gray vinyl plank. We're going gray on the walls, white on the ceiling, semi-gloss white enamel on doors and trim, and flat white on the ceiling inside of closets, right? And so when we're upgrading the appliances, all of that kind of stuff, we're budgeting about $10 a foot. And then if we're changing out bathtubs, tub surrounds, all that kind of stuff, and then upgrading like kitchen countertops, we're going with $20 a foot as our price. So like I walked through this house, outside, totally fine. Fascia soffits have been replaced recently. It's got a relatively new roof. No foundation issues. The four big-ticket items that you can never have, just like a rule of thumb, you've got to actually calculate are air conditioning, plumbing, foundation, and roof. You get those four. If you miss any of those four, then you've blown your budget, right? You've got to be able to calculate all of those. And there's rules of thumb based on the size of the house, but, in terms of replacing condensers and coils and things like that. But I always go in and say, hey, is this a $10 foot rehab? Is it a $20 foot rehab? Or is it a $30 foot rehab? And I'm always rounding up. If I'm kind of unsure, is it like 10 or 14 or 16? Or I'm just, hey, it's a $20 foot rehab. Because I'd always rather budget more when I'm buying it. Now, if I already own it and I've done everything right on the front end, because on the front end, I'll replace the hot water heater if it's more than about 8 or 10 years old. Even though it's still working, I don't want it to be a problem for a really, really long time because I know how I'm going to have it serviced and all those kind of things. Same thing with an air conditioner. If the air conditioner is 15 years old and it's still working, I'm going to fix that on the front end. I'll put all of that in. I'll typically buy the property with hard money. I'll fix everything that I need so that I get the purchase and the rehab, and then I'll refinance it out on a longer-term 30-year financing so that it's all rolled in and I've capitalized all those expenses with long-term financing. Does that make sense?
Okay.
Then when I go back and a tenant moves out, all I really have to do is either paint the whole thing again, maybe change out some ceiling fans because those are pretty cheap, maybe change out some faucets, maybe, and if I've gone all vinyl, I don't have to do any flooring, so I could probably get by with $7 a foot, $10 a foot at most. So one of the things that when we're looking at rental properties, we like smaller 1,500 square foot properties better than like 18 to 2,200 square foot properties. Because that means if I'm doing $10 a foot on a 1,400 square foot house, I've only got $14,000. Versus if I get $10 a foot on a 2,200 square foot house, I've got $22,000. Does that help?
Right.
Yeah. So rule of thumb is I typically would budget $10 a foot and hope to get in for 6 or 7.
Okay.
Thanks, Robert. Thanks for the call, man.
Appreciate you.
Okay, so we were talking about investing versus speculating. And during the break, I've looked up a couple different stock prices. I've looked up Exxon, which is, keeps falling. It's down to $1.31 right now. It's at $80.07. I've got Apple up right now. Apple's trading at $183.69, also down $1.23. I've got Facebook stock up here trading at $196, down $4.77 just on the day. So if you're invested in stocks, you've lost money today on all three just kind of randomly. I even pulled up General Motors, Government Motors, as we want to call it, $40.84. Here's one of the things that I've always found fascinating. What we know about the stock market is we want to buy low, we want to sell high. And what's happened is, whenever I had a broker that was telling me what I should do with my money, I always found it fascinating. Hey, guy, what I want you to do is, with the market, if you think it's going to go up, then tell me to buy. And if you think that the market's going to go down, I want you to tell me to sell. And invariably what would happen is the market would go super high. It would go from, let's say, if GM went from $40 a share to $50 a share, they'd see it run up 10 points like that, and they'd say, oh, we're now giving GM a strong buy. And I'd be like, wait, it just went up $10 a share. Why would you give it a buy now? Seems like you would have given it a buy $10 a share ago. And then you'd watch a stock fall $10, go from 50 down to 40, and they'd say, oh, we're giving it a sell now. I'm like, wait, why didn't you give it a sell when it was at its peak? Why? Now it seems like now that it's fallen this much, you'd want to give it a buy, right? Here's what I know is that even the experts that are in the marketplace day in and day out, they can't tell you a year from now if the market's going to be higher or lower. You're going to have economists that will say right now, half of them are going to say it's going to be higher. They're like weathermen. I mean, oh, you got a 50% chance of rain today. Yeah, thanks for nothing. I feel like that the people that are the financial advisors, that's how they throw darts and give their projections, is that you've got a 50% chance of it going up, you've got a 50% chance of it going down. And so they come up with this idea of dollar cost averaging. The more that it falls, pour more and more, so it lowers your average cost per house or per stock. That does work in some asset classes. Assuming that you think that it's going to come back in value. Let's compare that with what you can do with a single-family house. Right now, I can buy on HAR. I can go to HAR.com. I can look at houses that are available in a particular area for $150,000. I can do that on the radio right now, but it won't make for very good radio. But just assume that I find a retail-ready house for $150,000. It's a 3-bedroom, 2-bath. It's clean, but it's a good rental house. Let's say it rents for $1,500 a month. I can pay full retail price at $150,000. A bank will tell me, yeah, you know what? That's a collateralized asset. We'll loan you 80% of that. We want you to have skin in the game. You put 20% down. So 20% of $150,000 is $30,000. So I've got $30,000 down. I'm going to finance $120,000. Now, if I have principal, interest, taxes, and insurance, my monthly payment, my mortgage with all the expenses covered in, on $120,000, I'm going to estimate it's about $1,050 a month. And then I'm going to add another $100 a month for a management fee. So I'm in at $1,150. And again, if I'm budgeting, I always want to add a little bit of extra so that I'd rather over budget and perform better than what my budget is. Because if my expenses are lower than what I budget, then I make extra profit. If my expenses are higher than what I budget, it comes straight out of the bottom line. So I'm going to round that up to $1,200 a month and say that I'm going to rent the property for $1,500 a month. Now that's $300 a month, which is $3,600 a year, and I've only got $30,000 in on a $150,000 investment. So that gives me a 12% rate of return on my what we call cash on cash. The amount of money I have in the deal is $30,000. The amount of money that I'll get back, it's kind of like a dividend. It's not a dividend. It's what we call profit. It's profit in the deal. It's cash flow, but $3,600 divided by $30,000 is 12%. Now, I also know that those properties right now and historically, they've been growing at somewhere between 5 and 7% per year in terms of appreciation. Because they're not making any more $150,000 houses. Those houses are below replacement costs. Nobody can go and build a brand new $140,000, $150,000 house to compete with that. The only thing that they can do is build $200,000, $225,000, $250,000 houses and more. So that means that value of that house, since there's fewer and fewer of those and more people wanting to buy cheaper and cheaper houses, it causes the price to go up, and about 7% per year. So, well, what's 7% on $150,000? I mean, it's about $10,500, and $10,500 divided by $30,000, I believe, is 35%. So I'm getting about 35% in terms of appreciation, and I'm getting 12% in cash flow. That gives me about a 47% rate of return on an annualized basis. Imagine if I told you, hey, Exxon's going to be up 35% next year versus this year. And it's going to pay out a dividend every quarter of 3% or about 12% per year as a dividend. Who wouldn't jump on that stock? So people say, yeah, but I don't really, I hear what you're saying, but I don't really understand what what we're doing. Yeah, you know what? It's all knowable. I mean, it's very easy to learn this. Easy place to learn. You can listen to our radio show. We do this 5 days a week. You can also we do a free event once a month. We're talking about starting to do it twice a month, where we do an introduction to real estate. We typically have a case study. Our case study this month is going to be phenomenal. We've got a couple. They joined us in March of 2017. They've purchased 9 rentals since March. They has an ARV, an after repair value on those properties, bought about $1.2 million worth of properties. But that was the value of the properties that they purchased. But they didn't pay $1.2 million for those houses. They paid $740,000 for $1.2 million worth of properties. Now, I hear a lot of people saying right now in their head, but I don't have $740,000 to buy all those properties. And one of the things that we teach you is that this is a self-collateralizing asset. You don't need $750,000 in cash in order to be able to buy $740,000 worth of properties. Now, they also did rehab on these properties. They rehabbed, spent about $160,000. They're all in. 740 plus 165 is about 905. That means at 905, you take $1.2 million, subtract 905. That's about $295,000 worth of equity that they've captured. Now imagine if their 1.2 million is growing at 7% on an annual basis. 1.02 times 0.07, $84,000 a year in appreciation. Now that's what you call passive income. But they've also picked up monthly cash flow of about $3,600 a month, yearly cash flow of about $43,000. Just what they've done in the last year has created $80,000 a year. Keep in mind there's three different ways they made money here. They captured about $300,000 in equity when they bought the properties. In other words, the amount of value of the property versus the amount of debt that they have if they financed it at 100%. Captured almost $300,000 in equity. Their appreciation is going to be about $84,000 a year if it's at 7%. Their cash flow is going to be about $43,000 a year. So they not only captured $300,000 when they bought it, but they created between appreciation and cash flow a growth of about $120,000. Not a bad year. I mean, I'd say that's killing it. And compare that with, what if they'd have bought $1.2 million worth of stock in the stock market right now? Well, if you take $1.2 million and 6 months ago when I looked at it divided by $87 a share, they'd have bought 13,793 shares and then multiply that times 80. Their $1.2 million would have dropped to about $1.1 million right now. They'd had about a $100,000 loss. You're listening to Right Path Real Estate Radio, 713-785-1817. Hey,
mic's off.
Hey, Nikki, if you'll turn that background music up just a little bit. I kind of heard it faintly, and I was like, I wasn't sure, so.
Okay.
All right, cool.
I don't want to drown you out.
No, I hear you. Yeah. But I need to be able to hear it.
Yeah.
I don't know if you turn it up in my ears, then can you have to
turn
go
it up in your ears? That's live.
Okay, got it. All right. Yeah.
We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can visit us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are small returns
30
getting in the
seconds.
way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
All right. Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. So what I want to share with you next is our next event is going to be our weekend event. And then actually, I take that back. The next event that you can actually see us at is going to be at the up in Dallas. And that's the next event that I'm going to be at. Then the event after that, I'm going to go to Right Path Real Estate Radio, rightpathrealestate.com right now. And our event for our weekend, we've already had people signing up because it's probably going to fill up this time, July 21st and 22nd from 9 a.m. to 5 p.m. It's going to be here at our studio. Go to rightpathrealestate.com. Go to the event section. The case study that I was just talking about, you get a chance to meet the couple that's going to be sharing that, talking about their story, how they got started in real estate, how they met us, how they've been working with us, this kind of success, how we've helped them grow their business. If we can do it with them, we can help you as well. That's going to be Thursday, July 19th. It's going to be at the Crown Plaza Galleria. That's on the Katy Freeway across from IKEA. July 19th, that's free to go to. Not only are we going to have a case study, we're going to have an introduction to real estate. We're going to talk about how do you find these deals? That's one of the number one questions that we get. How do you find the deals?
1 minute.
And then how do you fund the deals? We talk about that as well. How do you analyze the deal? And then how do you pull the trigger on the deal? What's the process? If you want to learn all those things, in fact, if you want to learn it before July 19th, send an email today, support@rightpathrealestate.com, support@rightpathrealestate.com. Hey, guys, thanks for listening. I will be in the studio tomorrow with Build Your Team Tuesday. Excited to be here tomorrow. Thanks for listening.
All right, Tom, have a good one.
All right.